Education credits are reported on Form 8863. There are refundable and non-refundable education credits. Let's take a look. Education credits are a complex topic, so let's break this down. There's a full tab, Tab J, discussing education credits in Publication 4012. As noted before, there are refundable and non-refundable credits. The key is to figure out who qualifies for an education credit and then determine the most advantageous credit the taxpayer can claim. To claim the credit, the student must be either the taxpayer, spouse, or a dependent. Eligible education institution generally means accredited, but there is a website on this slide to look up the schools that are accredited. Dependents cannot also be claimed on someone else's tax return. Next step is to identify and determine if the education expenses are qualified or not. Expenses differ between Lifetime Learning Credit and the American Opportunity Credit. The taxpayer should have all documents such as receipts, although we only need to see Form 1098-T tuition statement. There may be multiple. It would be very helpful to see the full student ledger provided by the school. Form 1098-T is also provided to the IRS, so our TaxSlayer entries must match the information provided to the IRS. If a student receives a scholarship or other assistance, you may need to reduce the amount paid out. If you pay for this year for next spring, you can claim it, at least if the class begins in January, February, or March. You cannot include tax-free part of Pell Grants or other such assistance. You can include loans, meaning you will have to pay the money back. The following aren't qualifying expenses for education credits: room and board, insurance, medical, transportation, or personal expenses, even if the amount must be paid to the institution as a condition of enrollment or attendance. If the educational expenses are associated with sports, games, hobbies, or other non-credit courses, see Publication 970 for more information. Qualified expenses for the American Opportunity Credit include books, supplies, and equipment no matter where you purchase them. This is usually the most beneficial credit if the student qualifies. All of these must apply to qualify for the American Opportunity Credit. See the Qualification Sample Interview Guide on page J14 of the Publication 4012. It walks you through the questions to ask to determine qualification. This chart is for the student claiming the credit on their own return. In the case of the parents claiming the American Opportunity Credit on the parent's return, substitute the student for you. The American Opportunity Credit is only available to be taken for the first 4 years of college, regardless if the student is a super senior and does more than 4 years. A taxpayer can only claim it for 4 tax returns. Let's take a look at the math. If you enter the information correctly in TaxSlayer, TaxSlayer will do all the math, complete Form 8863, and transfer the refundable and non-refundable amounts to the proper lines on Form 1040. The American Opportunity Credit phases out at $90,000 adjusted gross income single, $180,000 married filing jointly. Not a factor if our taxpayers are within the $66,000 adjusted gross income guideline. There are instances where this credit will benefit the parents. Suppose the student has $4,000 in expenses but receives a $3,000 scholarship. Now the $4,000 is reduced by that $3,000, leaving only $1,000 to claim. However, if the student claims that $3,000 was not used for education expenses, if possible, then the parents can take the entire $4,000. the student would file a return with $3,000 in income. Of course, the student would not be able to take the full standard deduction, but with that income, it's very likely there would be no tax liability in any way. Please note the student's tax return in this scenario would be out of scope for our program. Unlike the American Opportunity Credit, the Lifetime Learning Credit is non-refundable. The eligibility is easier, less stringent, and the maximum credit amount is lower. There is no time limits on how many times you can take it. The course materials also have to be paid to the institution as a condition of enrollment or attendance. This can be used to improve job skills or for post-secondary education. Compare the two different credits to determine which is best for your taxpayer. You cannot take both for the same student, but you may have both if you have multiple students on the return. Although tuition is no longer allowed as an adjustment to income, still, if the taxpayer uses a Schedule C, there's another option for writing off education expenses as a business expense. You cannot claim the same expense on a Schedule C and Form 8863. If education expenses are qualified for more than one credit, review and decide which education credit is better for the taxpayer. Enter each student in the proper sections of TaxSlayer. Make sure you are entering qualified expenses and have reduced the amounts as appropriate by any untaxed benefits. There is an entire section dedicated to education credits. See 4012 Education tab. This is a great reference source. In summary, we talked about the two education credits that may reduce a taxpayer's tax liability, the American Opportunity Credit and the Lifetime Learning Credit. Education expenses can be applied to those credits or deducted on Schedule C. 40% of the American Opportunity Credit is a refundable credit, which means taxpayers can receive up to $1,000 even if they have no tax liability. Compare the tax effects of the various education benefits and choose the method that results in the lowest tax. If you see figures in Box 4, adjustments made for a prior year, and Box 6, adjustments to scholarships or grants for a prior year on the 1098-T, this tax form is out of scope.